In this video, I'm going to talk about the top three things, top three reasons why I moved from being in the retail channel and going into the broker channel. If you've landed on this video, you might be a retail loan officer working for a mortgage company and maybe considering moving into the broker wholesale channel. This channel is all about my journey going from retail, being in retail for 18 years, working for 5 different mortgage companies, and transitioning into working as a brokerage, working under a brokerage, and what those differences are, what my wins were or are currently, and also what the drawbacks of making that switch over. Now, I'm very happy, super excited about the wholesale broker channel after being in retail for 18 years. The broker channel is absolutely amazing. However, there are some drawbacks. There are some things that you would want to know before making that transition. Over the last 18 years, people would just say, you don't want to be a broker. You won't have control over your files. You're not going to have the support that you need. Your files will be late. You won't be able to talk to underwriters. There was so many things that the retail shops, the mortgage companies, they all tell you so you don't make that move or transition into being a broker. Now, one thing I do want to mention is that most all mortgage companies, mortgage banks that you work for, that you maybe have worked for in the past, most all of these started out as a broker. So to get to be a mortgage company, the easiest route, and most companies, they start out as being a broker and then they go into mini correspondent, they get their warehouse line, and then they eventually get fully delegated to underwrite their own files. When you go fully delegated and you are able to originate your own files, even at the mini core or the correspondent channel, becomes very, very easy for a company, mortgage company, to hide their margins. So they're able to have profit on your loans and not necessarily tell you the exact truth of how much that profit is. In addition to that, the reason why they make that move from going to brokerage to being a full mortgage company, they also can start hedging their loans as well and make additional profit. One of the big major reasons why I made the transition from retail to wholesale is the transparency. So I worked for 5 different mortgage companies over the last 18 years, and every single one of those companies was not fully transparent on their margins. I would get the rate sheet and I would provide the interest rate. I knew what my commission was. Let's say my commission was 150 basis points as a loan officer. I saw the rate of what I would need to charge or give that client, what rate they would have to pay in order for me to make 150 basis points. And most of the time I knew, and it was very hard for me to figure this out, I knew that I was out of the market. And so at a retail mortgage company, you have your rate that you're selling, and you may not be super, super confident in that rate when you're offering it. So you might start out with a concession and ask for the company to have get a concession for your rates. So as a mortgage broker now, I am extremely confident in my rates. I'm extremely confident in the rate sheet and what I quote my customers. Before I made the switch to being a broker, I wish someone would have came to me and showed me this tool, and I would have gladly paid for this tool. And I'm going to show you this tool because this tool will actually help you in the retail model, knowing exactly where rates are at and how much, and get an idea of how much your company is marking up their interest rate. So if you go to loansifter.com, you can sign up for an account. It's going to be about $89 a month. But this is what brokers use to price out their loans. So almost every single wholesaler that's in the wholesale market, lenders, they're going to put their rate sheet in this Loan Sifter program, and you'll be able to price out your loans with literally hundreds of other lenders. And you'll be able to know exactly how much margin your company is marking up. So you can pay 89 bucks a month, and I would have gladly paid this, and anyone can sign up for this. So I'm going to price out a deal and show you what I mean. So we're going to do 400,000. Let's go 80% loan to value, 20% down. Let's go 780 credit score, and we're going to put the zip code in. And we're going to say primary residence, and we're going to go ahead and click submit. Now, as a broker now, I can choose any one of these investors. And by the way, most brokerages, including mine, I have a lot of these investors already sign up with my brokerage. And so if you go in here, it's going to provide the best pricing up here. I have my comp in here set. If we go in here to admin and look at the loan officer compensation, I have 2.25 in total margin built into this rate sheet. So that means that if you're in the broker channel and I close this loan, I'm going to go back here to the search results. And let's say we're going to pick United Wholesale. So UWM, they're the number one mortgage company, number one wholesaler out there. So at 6.125, that's almost par. This is going to pay me a commission of $7,200, $7,200. And that's with almost no points. So if you go to your rate sheet in the retail, you could sign up for one of these accounts and you can look at your rate sheet and know what your commission is. And then you can go to Loan Sifter or Optimal Blue, get this account, and you'll be able to compare right away how much margin your company is actually marking up on your loan. Now, I say that, there's some good mortgage companies out there and they definitely have to make money. All I'm saying is they should be honest with you with their margins. You should know exactly what that markup is and why you're paying that and what the service is that they're providing for you. Okay, this was my number one reason why I'm transferring out of the retail model and into the wholesale channel was the transparency of the pricing. So now today, because of how much more confident I am with my interest rates and what I'm offering to my customers, I can still make really good money in the mortgage and the broker channel, but I also can be extremely transparent to the borrower, to the family that's looking to get the loan. And so what I did here, you could actually post your live interest rates. So it's really easy to do, and I could show you how to do this, but this is my website here. And now I'm very transparent with my website with the interest rates that I provide, because a lot of retailers out there, they're not going to post their interest rates on their websites. Why? Is because they know they're going to be outside of the market. If you do make your move into the broker channel, I highly recommend you put your live interest rates on your website. And the technology is so easy to do this these days. You can have your live interest rates. So all of your clients, your realtors, anyone that finds you online can now go price out your loan. And so I get on this website, without spending any ad spend whatsoever, I get about 5 or 6 leads per week, and they're really, really good quality leads, just from posting my live interest rates on my website. The second reason why I made the transition was product availability. When I was in retail, if there was a product that the bank wasn't able to offer, they said, yes, you can broker that deal. You can broker it. Let's say it's a non-QM bank statement program, maybe DSCR. You can broker it to one of our wholesalers that we are partnered with, and you can broker as well as having that mortgage bank. Okay, that's great, but they're also taking a very large split for them to be able to make their money. And mortgage companies, they need to make quite a bit of margin on every deal. Even if you have to broker that deal, they need to make that money to cover their expenses, because they have middle management, they have all the underwriters, they have the compliance department that they have their advertising, all of these departments that they have to cover on their payroll. And so the products now that I have the ability to offer to my customers, the DSCR, the bank statement loans, all of these programs, I can still make the same amount of commission that what I would on a regular conventional deal. So I'm super excited now about these products that I'm able to offer. I just closed a loan where a client, they obviously their tax returns didn't match up. Also, their bank statements, they had a bunch of overdraft fees on their bank statements. And so what I did for them is I did a profit and loss deal. So I did a P&L loan for this customer. We just went off of their P&L that was audited from their accountant, and I was able to get that deal done, but just with their profit and loss statement. Now, I wouldn't have been able to do that in the retail model channel. The second type of product that I crushed it this last year is equity lines, home equity line of credit. When I was in retail, the equity lines were hard to get. They were hard to make any money on because the bank's taken so much margin out of them. It wasn't really any kind of a money maker. There's so many amazing companies out there that offer HELOCs to brokers. One of them being Nifty Door. Nifty Door, I just closed a HELOC just last week, and it took 4 days to get it done. They did an AVM for the value. The borrower uploaded their bank statements, got their income right away verified. They were approved within hours after applying for the HELOC. Within 4 days after applying, they were able to get it done, and then they had to wait their rescission period, and they were able to get their money super quick. I was able to make a full 2% on that HELOC, and I did very little work. I didn't need a processor. I didn't need a LOA because the borrower uploaded all their information, and they pretty much controlled the entire process from the easy, user-friendly website that Nifty Door has. The third big reason why I made the move was how I got paid. When I was in retail, I grew a branch up to like 27, 28 people total in my branch when I was working for a mortgage company. And I had a profit and loss statement. They told me that, if I wanted to recruit new loan officers, I had to pay them minimum wage. That's the risk that the bank wanted to do. They didn't want that risk, and they chose to do that. And so if I wanted to scale or grow my business, I had to pay my loan officers W-2, number one, and I had to pay them minimum wage. Well, what if they didn't close the deal? Then that means I was out. They're charging me, my branch P&L for that W-2 or for that loan officer's pay. So as a mortgage broker now, I can get paid 1099, and it's a complete game changer. As I want to build my branch, I don't have to pay W-2, and there's different states require different pay. Most states do allow to pay 1099 their loan officers on the broker channel. You're able to get paid 1099 or pay 1099 to your loan officers that want to work for you. So there's two benefits here. Number one, I get paid 1099. So I get to choose what my expenses are, what I write off at the end of the year. I can create an LLC or a corporation for that money coming in, and then I can manage my expenses as I need. Also, if I want to grow a branch, I want to hire and recruit new loan officers, I can hire commission-only loan officers that get paid 1099. The beautiful thing here is I don't have any monthly expense for minimum wage or paying W-2 or wages. I want to clarify this with you that not every state allows 1099, and most states do allow 1099. And there's some banks, some brokerages as well that don't necessarily want to take that risk, and the risk is really with the employment agencies of each state. But you want to make sure if you do pay 1099 is that you don't have any requirements for that loan officer, or that you're not providing any value to that loan officer when they're being paid 1099. But this was a huge benefit for me and my business when I transitioned out of the retail model and into the brokerage model. One of the last mortgage companies that I worked for, I grew my mortgage branch up to 28 people. I had like 17, 18 loan officers, and then I had 4 or 5 support staff, processors, LOAs, front desk. We were a huge operation. In my operating reserve account, in my P&L, I had over $500,000 for my reserves. What ended up happening was this mortgage company that I was working for, back to the transparency part, they weren't honest with their financials. And they called me one day and they said, "Hey, Pete, I'm really sorry, but we're not going to be able to meet your payroll." Now, I'm not saying that, all companies are going to operate like this, but you run that risk if you have a large operating account with the particular mortgage company that you're with, whether you're a branch manager or you're regional, or maybe you run a division. There's risk there because that money is not necessarily in your name. It's in the mortgage company's name. So that $500,000 just went bye-bye. It went gone. At that hard work commission that I had made over the, course of 2, 3, 4 years was just gone. Now being paid 1099, I control my bank account. I control my reserves. The bank account's in my name, and it's brings so much more confidence in me to be able to build my business, build my brokerage, build branch, recruit loan officers. These were the top 3 reasons why I made the switch. Now, this channel is going to be covering the differences and why you might consider the brokerage, but I'm also going to go through the negatives and why the brokerage channel is challenging and why it might not be a good fit for you as well. That's it for this video. Thank you so much for watching. If you like this content and you want to see more the differences between retail and wholesale, give it a follow. Thank you so much, and we'll talk to you guys soon.